Hello, everybody. I'm Jason, the Wizard of Ops, and Dark Matter is not here yet. I guess he's a little late. Maybe it's spring break for us, so maybe he's getting his kids ready or something like that. But anyway, um, I'm here. I'm going to go over probably a little. I'll do a little bit of macro talk because it seems like macro is kind of controlling a lot of the narrative nowadays, and then I'll look at Vanna. And if you read my Substack this morning, you saw we, over the past week and a half, have had 4 vol signals, right? So April 3rd, 4th, 8th, and 10th, I believe, right? The 4th, 8th, and 10th are all satisfied. They're all done. But really that third, the one that was very profound, the right after Trump's, little placard with his tariffs, that's the one that I'm always kind of focused on. Like that's the one that I trade toward because it's also got the highest payout, right? So we'll, after I talk a little bit of macro, we'll explore Volland and see what we see for that one. And also, I think I'm going to also do just a quick overlook, maybe on a couple of earnings that'll be tomorrow. In Volland, earnings are, kind of more effective on like Thursday, Friday time frame, Wednesday, Thursday, Friday. But tomorrow we can give kind of like a little brief look. And then for premium subscribers, I will do Netflix and TSM for Thursday. So that'll be the show that I'll do. All right, I'll talk about Vanna first. we got it thrown up there first. So first I'll talk about the vol signal that we had on April 3rd. So on April 3rd, on April 2nd, we closed at 56.70. April 3rd, we had a vol event. That means that within 3 weeks, we should reach 56.70 again. This is about a week and a half since then. So, 9 days. So we're pretty close to that, we're halfway through in time. And we are now at what, 5,400 or so, right? Futures fluctuate. We closed to 53.63. We have not yet closed above that big, tariff suspension tweet or whatever it was, Truth Social thing, where he suspended tariffs for 90 days, he being Trump. And we have to pass that high and then get up to the 5,600s. Let's see if it's even plausible. So this is the all expiration Vanna right here. And as you can see, it's very positive. So that's very good, especially in a vol crush environment. We are still, VIX is still at 37 or 36 or so. We closed. It's now at 33 in the pre-market. So that vol crush we're expecting is good in a positive Vanna environment. So we could definitely reach up here. This is the 56.70 area. That would only cut down $2.5 billion out of significantly more. I guess, what is it? Out of almost 27 billion of Vanna. So I think it's definitely possible on the all expiration. Let's see. For this week is OPEX week. So there's a lot of traffic. There's a lot of existing positioning this week already. And again, we have a lot of support from all these volatility events, from the market dropping. We have a lot of support down here. And that should, about 2 billion in Vanna in support going into the end of the week. Now, remember, Friday is an off day. It's Good Friday. Happy Holy Week to everybody who celebrates. So it's Good Friday. The market is off on Good Friday. And so we got Thursday, and then we have a couple days next week. I do still think, though, this Vanna will push us up for 4 days. And it looks like here in this right here, this 55.50 is the first place I'd want to see a push above in order to be extremely confident to get to 5,600 I apologize, everybody. My computer went, or my internet, my Verizon Fios internet went down. That stinks. Sorry, apologize. Let me share my screen again. Okay, can everybody see me on the stream? Can somebody respond? Risk reversal, Johannes, anybody? All right, good. Thank you, Tom. So, yeah, I got to fire Verizon. It's been they occasionally throw that in there, but I'm using my hotspot now. So, all right. Anyway, so I was getting into the all expiration. We were looking at this week for OPEX week. I'll just summarize very quickly what I was saying before. 55.50 is the big hump to get over to see 5,600s this week. There's also kind of a hump here at 56.25. I think there's a good chance of reaching, the 56.70 area. There's a chance. But I would target, like, if you're just trading for this week, I would target this 55.50 area. We can peek over a little bit, but, target there. That is, 200 points in a week. So that's not, it's not nothing. But yeah, so that's where I would go for that. All right. So for next week is interesting because, once you pass April expiration, during these vol events and during the tumultuous time, there were a lot of interesting trades being put on. It'll throw off kind of a lot of the, JEX type services because there were a lot of sold calls or a lot of condors put on for May 2nd. There were condors put on all over the place. And this for next week is showing the first of that kind of weird area where we start seeing sold puts over here down in the 4,800, 4,750 area. Even if this turned out, like if this was a spread and this turns out to be a positive gamma Vanna, it is kind of it's still strange that there are, not strange, but it's different that there are sold put verticals by customers in this area, and puts being used for bullish purposes. So it is only minus 500 million, so it's not a lot. Very flat for most of next week. So, I mean, any kind of momentum can get us up to that 56.70 area. I honestly do think we will hit it. I think there's a very good chance of hitting it. And the data kind of suggests that as well. All right. So, and yeah, the Vanna inertia is saying minus 0.28. I think the biggest thing to watch is right over here in the liquidity widget. So liquidity is extraordinarily tight right now, right? This widget right here is showing how wide the dealers are accepting spreads from fair value. So, and we adjust it for delta. So if you have like a delta 1 and it's 5 cents off of fair value, then that's different than delta 90 with 5 cents off of fair value. So, I mean, it's kind of we do adjust it for delta, but this is extraordinarily high. We hit, last week we hit like in the 47, 48 range. So it has dropped considerably, which is good. Dropping is good in spreads. That means liquidity is returning, and that will probably cause a significant vol crunch over the next week or so. Assuming, of course, there's no major crazy headlines or anything like that. So I think that vol crunch will get us, up to that 56 area, and then we'll reevaluate where we're going from there. But 56.70, the target by, call it get safe end of next week, should help out. I have trades on for the end of the month for that. So, give it some time a little bit, always don't, pinpoint that one moment. All right. So that's what I have for this. I will talk a little quick. I'll look at the questions real quick. Stream. Yeah. I'm sorry, everybody. Yeah, I got to fire Verizon. I got to get a new business line. But anyway, zero DTE. So Yazid, I could look at zero DTE, but that changes as soon as we ramp up. The thing is that as soon as the market opens, zero DTE changes, because that's when all the traffic happens, is during the market day of zero DTE. So I would, for now, I would, like, you kind of have to. You can't do zero DTE before the market opens. That's why. So there's all the volume is during the day. So anyway, all right. Yuli Geo says that liquidity measure, that can concept be transferred to the DOM, or is it just based on the spreads? So our liquidity measure is based solely on the spread between our fair value calculation that we use to determine dealer and customer owned options and the actual execution price. And the farther away that is, the more edge dealers are needing in order to, the more edge the dealers need in order to feel, I guess, safe, I guess is the right word, because they're unsure. It's basically a measure of dealer uncertainty. The higher that level is, the more uncertain dealers are, and the more you have to pay for options. So so that's essentially, that's basically the essence of what that spread is talking about. All right, so let's talk a little bit of macro, because last time I was speaking on a show like this, we were talking about Trump tariffs, and there was no suspension yet, and then he suspended tariffs. We took off like 10% in a day. It was, Volland was showing, and if you paid attention to even my free Substack, it showed that there was this coiled spring. Every drop was more and more intense. It just kept pressing the spring, and then all we needed was that one headline, and we shot up 10%. And even if we didn't get that headline, I'm pretty sure we would have crawled up 10% in pretty short order. So I mean, really, that's really the key to identifying this. When people, customers buy puts, and a lot of people buy puts, as they buy those puts and price goes into that put level, if they're not closing the puts, which they actually normally don't, a lot of people talk about, they're closing their positions as they go in the money, and that doesn't happen. Those puts are hedging a portfolio. So really the bullish side of it, you don't see in the option space, you see it in the stock space. But they're hedging in the puts is really what we see. And that is the dealer hedging on those puts is what is more actively traded. So now that we kind of get that out of the way, we get this coiled spring as the price goes deeper and deeper into those puts. And now we are, we just saw on the Volland all expiration, we just saw what happens. Now we are at maximum Vanna levels, in that deep valley. And those kind of levels are, where that coiled spring gets us to. And then because we're positive Vanna, as implied volatility will come down, we will keep creeping up for a while, of course, assuming no headlines. So let's talk about what possible headlines can come. Obviously, Trump kind of shocked the world with his tariff plan. And when that happened, I was kind of expecting. I didn't think that Trump would leave it on forever. I mean, you don't know, because it seems like it's very unpredictable and uncertain. But I didn't get that impression that he was going to let the market burn, right? So, he did his suspension, telegraphed it a little bit, whatever. And then he, the market rose and it's now, we're in positive Vanna and we're still kind of creeping up. What can happen with these tariffs? Well, I think that the next news that Trump will talk about is going to be kind of a parade of countries that have reached a deal. Oh, we reached a great deal with the EU, or even even the obscure countries. Every single one, he's going to be like, oh, it that we reached this wonderful deal. Thank goodness to President of El Salvador or whoever. Thank goodness for that, and now we're good with El Salvador, right? So that's kind of the news cycle that I expect on the tariff side. As far as like global economy goes, right now, I mean, America imports about a third of foreign trade worldwide, right? Like of every shipment that leaves a country to go to another country, a third of it, that other country is the United States. And what we're beginning to see are, even now, are ships that have not reached America before the deadlines, right? Before the tariffs have been instituted, particularly from China. And China is obviously, they have an extraordinarily large budget trade surplus of over $100 billion. So right now, where are all those goods going? There's cancellations happening all over the place. China is going to feel it probably more than we are. I think that we're going to feel it through inflation. We're going to have some goods that are just skyrocketing in expense, particularly food that comes from overseas, and any of those, like, you can kind of say made in China stuff, right? Like the any kind of clothing or something like that, whatever comes from China. Machinery, a lot of machinery comes from China. That made in China stuff, we're going to see higher prices. However, they are going to, so as our prices are going to go up, their prices are going to plummet. And deflation, as bad as inflation is, deflation is way worse. And it will spike China's economy to the downside. But as China's economy goes with their big trade surplus, all the other countries, Canada, and, everybody that China exports to, they are going to start probably trying to impose tariffs on China, because China is now going, all the goods that were going to go to America are now going to flood into Canada, into Mexico, into EU, into all the other countries that import. And that's, they're going to be overwhelmed. They can't, handle that kind of supply. So they are going to have a hard time as well. And they'll probably start warring against each other. The EU will start tariffing China. We don't want all your EVs. We don't want all this stuff. And they're going to have to protect their own industries. So I think this is kind of a big moment. Historically, we actually have had something like this happen before. In the 1930s, we've had, we instituted tariffs that, the Smoot-Hawley tariff of 1930. We did this once before, and this is what happened. Like, America kind of came protectionist. There was a little bit of an inflation push, and all the other countries started kind of getting into a trade war with each other, independent of America. So, and that really kind of exacerbated. The Great Depression had a lot of debt problems beforehand, and this kind of really tipped the scales hard. We are actually in kind of probably a worse position than we were during the right before the Great Depression, during the Roaring 20s. There was a lot of debt in the Roaring 20s, but now we have a lot more debt, right? Franklin Roosevelt had to spend a ton in order to get us out of the Great Depression, mostly from a war, right? But he had to spend a ton with the New Deal and the war in order to get us out. And we don't have that kind of space right now. We are already at 130% of GDP in public debt. We can't handle more debt than we have already. So kind of the long-term macroeconomic picture to me is a little bit more dire than even recession. I think that, though, we have to start seeing other countries start imposing tariffs on each other, and that may tip the scales pretty harshly. don't make no mistake, the world economy is in a precarious space right now. And I guess over the next 10 years or so, problems will arise from this tariff, thing. And really from before that, from the pandemic. I mean, a lot of our deficit problems are from the pandemic. And so now we are focusing on, the current situation, on the current debts, but this has extended from the pandemic. Also very similar to the 1920s, right? Where they had the Mexican flu, and that pandemic was the start. It started a debt cycle that culminated in the Great Depression. This is very similar. I mean, history doesn't often repeat, but it often rhymes. And this is very similar to what happened in the 20s. All right. So that is that's my soliloquy, I guess. I can go into, so here's the other thing too, is that I'm looking at comments, and Yazid talking about 0DTE. We have a Discord page, which, we have a link on our Twitter. I'll put a link in the, comments where you can be invited. Come on in. We do have a general page that is free, but we also have subscriber pages that we have 0DTE chatter all the time. People use order flow. Yuli Geo was talking about DOM before. We use they use order flow a lot for day trading, and it's very active page, and a lot of people appreciate that. So I think that's we just put that up on the Discord invite on the page. This community is very tight and it's very smart. Like that, I would say I'm probably not even the smartest person in the room. So you go there, and there's a lot of smart people, a lot of people making really good money and engaging in talk like what I'm talking to you right now. So that's what we got. And let's go to comments. Let's see. When BF line of sand is approached, do dealers not hedge their gamma, as hedging it would push us through the line in the sand? Depends. It depends on what the order flow is like. And a lot of times, Johannes, like over the past couple of weeks, the 0DTE space has been, implied volatility is expanding and contracting really fast. So it is being heavily affected by the longer tenors of options. But normally an event, Bank of America, which means Bank of America, for those who are, not familiar with our lexicon, that means that on the 0DTE time frame, people are buying calls and selling, or buying calls and buying puts. So that gives a lot of premium for dealers to play with, and they don't really hedge gamma very easily, because gamma really means they're losing, right? Like they need to overhedge gamma, they need to do stuff like that. But the 0DTE space has not been very uniform recently, and the higher tenor Vanna has been driving that, and the macro obviously have been driving flows recently. So yeah, that's that. I hope that answers your question, Johannes. If you look in the comments section, everybody, there's the link to the Discord. Just join us and ask questions. Either me or Ahmad or somebody will come and answer it. The general page is mostly for people asking questions. It's not as much. There is some trade talk in there, but not much. It's really the subscriber pages where you want to be. That's where everybody does their chatter. So Tom, who's he's a frequent contributor. He loves the thank you, Tom. Appreciate it. All right. So those are our comments, I guess. I thank you, everybody, And may Volland help you in your future trading ventures.